Good evening, everyone. My name's Zurrin. I'm the CEO of Shanta Gold, which is a London-listed gold producer based out in East Africa, in our home country of Tanzania. What I'm going to cover tonight, over the next 15 to 20 minutes, is a bit on our history, a little bit about what we've been accomplishing over the last few years, and then most importantly, what to look forward to, because I think that's where the story really starts to get exciting. So if you can look ahead. Here's a picture of our mine. Well, this is of our plant, actually. This is in the southwestern corner of Tanzania. For those of you who've been to Tanzania, it's an absolutely lovely country. It's an ex-colony of Britain. Here we are in the forest reserve. We've spent, you'll hear about this in the presentation, but I'll just give you a bit of background. Between this plant and all the other infrastructure around this area, we spent about $250 million over the years. Not under my watch all the time, but previous CEOs have spent that much, and the point here being it's very well invested. As I said, quick on the team, take you through who we are, a bit on Shanta. It's been listed in London for nearly 15 years, believe it or not. A bit on what we've been up to, and then again, as I said, the most important part is what to look forward to over the next 3, 12, 36 months. A bit on the team. I'm a Canadian. I've been involved in the mining sector for nearly 20 years. Probably about half of that has been spent in far-off places. I've lived in Ulaanbaatar for a number of years. I've been living on and off in Dar es Salaam for a number of years. That's in Tanzania. Ulaanbaatar is out in outer Mongolia. I initially started my career in a UBS investment bank in London, so cover the big corporates around Africa, Middle East, Scandinavia. So I have a lot of experience. Now in the crowd as well with me is Luke Leslie. He's our CFO. Luke and I have been working together for nearly 15 years. We're both at UBS and have had a lot of experience in different roles over the years. Something just to point out, which you may or may not see in other companies, probably not, is over 99% of our employee base is local, so is indigenized, which is a big strategic point in terms of being successful in these places. So we're Tanzanian as much as we can be. Now to take you through it, as I said, Shanta's been around for a while. We were listed first on AIM back in 2005. Believe it or not. So now we're coming up on our 15-year anniversary. We are an underground gold producer. We've been in production now, this is our 7th year, and over that time we've generated over £500 million of revenue. So this is a real company. We have 700 employees. Our USP is by far our cost structure. You know, we are a low-cost producer, which means we generate a lot of cash flow, and you'll see that in the coming slides. Last year, we produced just shy of 82,000 ounces, so it's about £100 million of revenue. And this year, we're on track to do slightly better than that at an all-in sustaining cost of $730 an ounce, which another way is to say we generate about $500 of, no more than that, about $700 of margin for every ounce of gold we take out. So it's a very, very profitable mine. We have 2 assets in Tanzania. We have a producing mine called the Luika gold mine, and we have a development project in another part of the country, both of which are fully permitted and very valuable to us. You may recognize some of the key shareholders. These are blue chip names in the UK. Odey Asset Management owns nearly 24% of the company. Majetti, which is a London-based long-only fund. We have River Mercantile, which has a number of funds. They're London-based, they're 7%. Sustainable Capital, which is a South African-based group, owns 12% of the company. Long, patient shareholders. Now, cast your eye here on the right-hand side of the slide. We're currently capitalized at a market cap of just over £60 million, which I think is incredible given our cash flow at the moment at this gold price is £50 million. Last year, our cash flow was £35 million. Against the market cap of £60 million. So it's incredibly attractive from a valuation perspective, which is why I'm a shareholder and I continue to accumulate shares as part of my pay. And as you can see here on a valuation attractiveness, we're trading at just over 2 times EBITDA, which is very interesting. Here it is, 7 years of history. This is on the right-hand side. You see these are the number of ounces we've produced per year. So last year we did 82,000 ounces. This year we're on track for 80 to 84,000 ounces. Again, that's roughly about 100 million pounds of turnover for this year. We have nearly 2 million ounces of inventory in the ground, which is a good number. We've invested a quarter $2 billion in infrastructure, so we're well invested. And as I said, we're now into this very lucrative period of generating free cash flow for the first time in a while. Now a bit on where we are. So Tanzania is, as you can see here, East Africa. For those who don't know much about it, it's interesting because it's one of the best endowed mining jurisdictions from a gold perspective in the world, and you'll see on the next slide what I'm talking about. But Tanzania's history has produced a lot of gold. We're currently the third largest gold producer, but by far there are two much bigger ones. Barrick Gold, which is the biggest gold producer in the world, is in Tanzania, and AngloGold Ashanti, which is a large South African group with about a dozen assets. So they have some big assets in country. We have our two assets, and as I said, we've been there for a long time. Now, what really sets out a good jurisdiction from a poor one really has to do with the quality of what's in the ground. Now, the way to measure that in the gold space is by measuring grade. So we like to refer to it as grams per ton. Now, here's a snapshot of some of the countries around the world. What it means for us is if you can imagine, for every ton of ore you take out of the ground, the average in the world is 1.15 grams, which works out to, roughly speaking, $40 of revenue for every ton you take out of the ground. Now, we have a resource base which is more than double that, 2.9 grams per ton, which works out to about $150 per ton. Now, what we actually mine on our reserves is even better than that. It's closer to 4.5 grams per ton, which gets you well over $200 per ton. So this is so it has to do with kind of the value of what you're taking out of the ground. It's kind of like if you were, say, fishing and you could fish for a ton of cod, or try and take out a ton of king crab. I know exactly which one you'd want to take, the more valuable one. And then this always translates into profitability, cost structure, and robustness. So it's really important to understand if you can't change what's in the ground, so you have to be able to show that you're mining in the right places. Now, what does that mean for us? Well, here's a snapshot of our cash flows we've had over the last few years. I've been involved with Shanta since the start of 2017. We've taken a modern approach to mining as opposed to the more draconian views in the sector. So we've really focused on cost containment, capital allocation, because it's really important you don't get overspending in the sector, which a lot of mining companies do. And for the last 12 months to the end of June, we generated about 35 million pounds of cash flow, so $45 million US. Now, since then, the gold price has gone up quite a bit, by about 20%. And at the current gold price, we're generating about 45 million pounds of cash flow every year. Now remember, this is in the context of a market cap of 60 million pounds. So it's incredibly exciting from an equity perspective. And the next question, obviously, is what have we been doing with all this cash? Now, part of the answer lies with the $250 million of investment that's gone into the ground, which I thank my predecessors for. And the other has to do with us repairing the balance sheet from all the money that's been spent. Now, when I took over this role back in this time 2 years ago, Q3 2017, Shanta had quite a bit of debt and was quite handicapped by too much debt on the balance sheet. The good news is now we're at the lowest debt level we've ever been as a producing company, and some point next year in 2020 we'll have net cash. So the first time in Shanta's history it won't have any more debt. That's very exciting because that means the equity holders, the shareholders, anyone who invests in the company gets 100% of the return instead of the debt holders getting all the benefit. So we're pretty excited by this. And as you can see, as the gold price goes up, the debt comes melting off the balance sheet even quicker. And that is our top focus, is getting rid of this debt to get to a point where we have maximum flexibility, both to invest in our exploration potential, which I'll go down in a second, but also to be able to ride out the cycles as they often do and always will do in the mining cycle. So a lot of cash flow we generate has gone to repay debt, but soon, as the debt rolls off, the next question will be, does it go to repay shareholders in the form of dividends? And that's something our board talks about very regularly. Now, what has it meant for shareholders since we've taken over, since Luke and I have been in this role for the last 2 years? Well, Shanta's done very well. Shanta shareholders have done very well in this period. We've outperformed all of our peers in London in terms of the gold space. We're up 160% over that period. And we like to think that at this valuation, 60 million pound market cap against 50 million pounds of annual cash flow, things are looking positive. And I really believe that. It looks like a pretty good time to be thinking about becoming a Shanta shareholder, which is why we're here, to explain the story. So it's very exciting, and the proof is the fact that the share price is responding and, most importantly, outperforming our peers. Now, as I said at the start of the presentation, really the interesting part of Shanta is what's next, what to look out for, what's really going to turn the dial. Why should you be thinking about, if you are, why would it make sense to think about becoming a shareholder in Shanta? Well, the way we like to lay out the reasonings are really around where we think the biggest value drivers are for the share price. And the way we've done it here naturally is in the order of priority. So first and foremost, the biggest driver of share price or value for Shanta, which is share price, is around extending the life. So our current mine life runs through to about 2024. So it's about 5 years from now. Now the question is, for every year we can add to that mine life, which takes drilling and exploration success, we add, at this gold price, about 50 million pounds of cash flow. Now, in an environment where we don't have any more debt, that's really exciting for the shareholders, because it's almost like you get a free market cap for every year we can add to the life of the mine. Now, I'll put that in context. In 2013, when the mine started production, the official life was 2.5 years. Now, here we are 6-7 years later, and the life is 5 years. So these assets have a history of replenishing their life, because the ground that they're in isn't specific to one gold vein. It's specific to a gold jurisdiction, a gold region. Now, what I can report is as follows. For the last 6 months, we've drilled about 8,000 meters of drilling, which has cost us about $1 million, which is not much at all in the context of our operations. And we'll be putting out some results before Christmas, which we're pretty excited by. And we've alluded to this in RNSs previously. We had some very interesting results in July from some initial drilling, which we added, at the time we were able to add 1 year of mine life on the back of, I think it was $160,000 of drilling. So, that's very exceptional, but that's the kind of thing we're looking for, is to invest into exploration, mine life extension, to add that 50 million pounds a year of cash flow on the back of very little investment, because all the infrastructure is already there. So you're literally adding more to it. It's like when you go fishing for that king crab, and someone all of a sudden says, listen, if you go into that bay, you're going to find a whole new life of fishing. That's where it gets really interesting. Now, the second feature for us in terms of value is a VAT claim we have, which has always been refunded and historically, and now the government, we have a claim against the government for $27 million, which is about, roughly about, I think it's about 20 million pounds. Now, the good news is the government has admitted to this, and just about a week ago, so just last week, they actually started refunding some of that money. So they gave 5% of it back to us. And we have very good dialogue with the government in Tanzania, and we believe, and we have a very good case that the rest of that will come back, that $27 million, over time. And I don't think the market gives us much credit for that. So that's a second area, and we'll tell you why we think it's going to come back. And then the third one really is the second project we have Singida it's called, has just under 1 million ounces of gold in the ground. And we have plans around asset level financing that to bring that into production. It would increase our production base by about 30%. So let me take you through these three things and then take you on to what to look out for. So here, this is really the core of it all. This is the 30 square kilometer footprint. You can see a number of different labels on the graph. These are our mining licenses. This is where all the value is. Now, what we can report is the ones that are circled in red are new targets that have been identified over the last 12 months, which we've actually been drilling now, and we'll put out results shortly on how we've been doing. We're really excited by what's happening here. This is the future of Shanta. Can you find more ounces in the ground where you can see this central processing plant? This is where all the money, that picture on the front page, that's that plant. So these are all within about 4 kilometers of the plant. You mine it, you truck it, you process it, you ship it out. It's really simple. Now the question is, can we find more ounces? And we believe we can. So keep your eye on this over the next couple of weeks. Number 2, the operating environment in Tanzania. It's getting better. It went through a patch of uncertainty. Barrick Gold, the largest gold producer in the world, has now taken over one of the assets there. They've had a resolution announced in October with the government. And as I've always been saying throughout the year, that was the catalyst for us to start getting back some of our VAT, which we were refunded on November 4th, $1.5 million. So we're really happy in Tanzania. As I said, I've been going there for a long time. I'm a resident in country, and we have a very good working relationship with the government. The third value driver for us is this IPO of our second asset. We're going to list it we're looking to list it in East Africa. So this is effectively a free option for Shanta Gold shareholders. There will be no dilution at the Topco in London for building this project. It'll either get funded in East Africa or it won't get funded at all. Our shareholders will not be on the hook for more money for Shanta. Shanta is a self-generating debt repayment story that can fund its own growth and ideally return capital to shareholders. We're in this harvesting period of this kind of cash machine. So here's our second project. Again, the market gives us, I think, very little to no credit for it. Fine. It's been in the portfolio for a long time, and we're looking at creative ways to unlock this value. So keep your eye on that. Now, in terms of our priorities over the next year, we're going to continue to deliver safe gold production. So this year we're on track for 80,000 to 84,000 ounces of gold production. I think for the 9-month period ending in September, we had about 64,000 ounces. So it's well on track to hit that guidance, if not do better. As I said, number 2, exploration is by far the biggest value driver for Shanta. Every year of mine life, we generate 50 million pounds of new cash flow. So that's exciting. Deleveraging, really simple. We'll be net cash on the balance sheet next year, something Shanta's never had. And then we have this VAT receivable with the government of Tanzania. They've started to refund it. It's about 30% of our market cap at the moment, the way to think of it. And we believe it's coming back in the form of cash or tax offsets. So we're optimistic there. Now, in terms of what to look out for over the next 3 months, just to give you a flavor, we've already announced this VAT refund in November. Last week, we are drilling another 4,000 meters across our portfolio this quarter. So we've done 8,000 meters. We'll report on that shortly. We'll do another 4,000 meters over the quarter. We have the mining licenses, which are about 30 square kilometers, and then we have a very large footprint around the mining licenses, which is equivalent to the size inside the M25, so to speak. So it's a good land holding. So we're drilling around that. We're going to put out an update this month in terms of new ounces into our reserves and resources from recent drilling. So that's I've alluded to that already. And then in December, just before Christmas, we'll put out an update on how the drilling's been going on since the end of September, which is so far we're encouraged. Third week of January, we'll put out our full year results and we'll give you an update on how the balance sheet's looking. So overall, a lot to look forward to. The story here is cash flow harvesting from high quality assets in a country we're very familiar with. So we're really excited by the overall story at a I think, a markdown valuation. So thank you very much.
Thank you. Thank you, Eric.
Hi, can I ask you two questions?
Sure.
First one is, Tanzania's been a wee bit robust with exploration companies this last wee while. How is your relationship with them? The second question is, do you forward sell any of your production? If so, at what price? And is there a price in gold that would encourage you to do that? And lastly, how geared is your share price to the actual movement in the price of gold?
All right, that's a good question. So the first one was a relationship with other exploration companies?
Yeah.
Right. I'll put it this way. We have enough ground in Tanzania that it'll keep us busy for a very long time. And the story around Shanta is to take the central processing facility where we have all this infrastructure invested and to find more ounces within what we call an economic circle. So probably give or take 20 kilometers around where the plant is. So we don't really have to kind of interact with other exploration companies. We know our peers very well, but we're self-sufficient. I'll jump to the third question because I can't quite remember the second one. But the forward sales. So the forward sales, we currently have about 40,000 ounces sold forward. We had to do that last year to protect ourselves against debt repayments. It was as simple as that. We don't speculate. We do it to protect the downside because it's an asymmetric return. If the gold price goes down and you can't repay your debt, you've got a big problem. So those forward sales will roll off over the course of next year. And we don't add any more forward sales to it. We want to be completely exposed to the gold price. That is the policy. We don't know what the gold price is going to do, but we're pretty good at mining gold. So in terms of whether that was, I think, your third question, how do we correlate with the gold price? We would like to think that we have a higher beta than the gold price because our mine life is relatively short on a 5-year basis. So we would, for every additional year of mine life, or as the gold price goes higher, we would like to be far better off in terms of returns than the gold price. And what you can see, on that share price return chart, we were up 160%, and the gold price was up 14% over the same period. So, I think it's you want to choose, if you can, you want to choose the better companies, lower cost, more robust cash flow producers in the space.
So you wouldn't forward sell enough to cover your fixed cost base?
No, we wouldn't. No, we don't want to speculate on the gold price. Once we're through these forward sales, we're done. Yeah, it's for the shareholders to manage their own gold exposure.
The VAT amount, is that changing all the time? Is it increasing? Or?
It does, yeah. It goes up every month by about $600,000. So it's a function of contracts we have with suppliers. You pay 18% VAT on. And so we've got it down to as far as we can. My predecessor had it. I think he was outflowing 1.2 million a month. So we've got it down to 600 a month. And the way it works now is we're confident we can start to offset that against corporate taxes. So we'll start clawing that back over the next, immediately.
But you've got no guarantee.
Well, the offsets is in the law. So that's that point. In terms of getting cash refunds, there's no guarantee on that, of course. It's up to the government to pay us or not. But they're showing a willingness. I mean, as I said last week, they returned 1.4 million after a very long time. And I see them regularly. I'm back in Tanzania next week. So we have a very good relationship, big employer, we're a big taxpayer. So we have a good relationship with them.
I guess you have big responsibility in putting the land back together again after lifting all this gold. I mean, is that part of your cost base?
Yeah, it is. Yeah, there's we have what's called a mine closure plan. So it's we do it very carefully with it's a well prepared document. We're still continue to evolve, and we do that with the government authorities. So they come and audit on a quarterly basis to see what we're doing. And as part of our cost base, we invest in the closure plan on a quarterly basis. So for instance, we've just been rehabilitating some of the waste dumps that we've created. So you do leveling, you put soil on top of them, and you plant seeds to let the vegetation return. So it's something that's very familiar in the mining space is managing your closure liabilities, and we do that over the remaining life of mine to ensure that at the end of it, we've left the we left the ground in a condition that the government is willing to accept.
How about the toxic chemicals used in the process of refining the gold?
Yeah, they're contained in what's called a tailings storage facility. I don't think it's on the picture there. So TSF, so these are called waste dumps, so tailings storage facilities. They're lined. They're lined with HDP lining, and so we have one which is full, and we have another one which is just recently constructed, lined on the walls, and that again is reviewed on a very regular basis, so quarterly, with the government authorities who come down and check it. The last thing you want to do is have an environmental problem, and as I said, we've been there 7 years. We have independent contractors who come and check on our behalf. We have the government who comes and works with us to monitor it, and there's absolutely no problem there. So it's we're fine, we're compliant, and it's part of part of the regular mining activities.
Because I know in Australia, the Morgan mine outside Queensland, there's big lakes full of this green toxic stuff that's been there for years.
Yeah, what you do with those is you rehabilitate them with saprolite. So you basically take, it's a type of material, you put it over top and you create vegetation on top of it. It's a well-recognized practice in the sector. And so that's what we're doing with our TSF1, and that's what we'll do with our TSF2.
Excellent. Great, thank you for that, Eric.
Thanks
Appreciate
very much.
it.